Hello, this is Brian Shannon from Alpha Trends Blogspot. Today is Wednesday, December 5th, 2007. On Wall Street today, we're looking at shares of Google. Google has been in a great uptrend. You can see here on the weekly time frame, it broke past some resistance at about the 560 level just about 3 months ago. And it's been a real nice uptrend since then. When we look at the daily time frame, you can see that the recent pullback came down and found some support along the rising 50-day moving average. That level was also an area where it had been a 50% retracement of the move from the August lows to the recent highs. So there were definitely buyers in that area now. However, what it's looking like at this point is that we've got the possibility that this market is making a lower high. And the reason that concerns me is because it's been trading very similar to the way that Research in Motion has been trading. And Research in Motion has made that lower high and really failed from that level and broke down through the 50-day moving average. Now, Google is holding up much better than Research in Motion, but we have what could be maybe not necessarily a topping action where we're going to see much lower prices, but we could at least see more consolidation through time. The most recent leg higher that we've seen, first of all, I've already had this marked up because I've been looking at it a lot on my blog recently, starting with this MACD divergence and then the move past resistance here. The stock has been making a nice series of higher highs and higher lows with this resistance acting as support. You can see that that level just broke. So the stock has a little bit of resistance right now at about $695 a share. And you can see also on here when I clear it up that the stock, let's just switch it down to a 30-minute time frame. This orange moving average is a 5-day moving average, and it's been very good for identifying trades or trends of about a week to 2 weeks. And right now we've got that 5-day moving average flattening out after the stock has seen a retracement of the leg lower of 61.8%, and that failed. So I think you've got to be very cautious on Google right here at this point from a shorter term trading standpoint. I think that if this market, if Google actually breaks down below about 655 or so, then I think that this stock is in for bigger trouble. They could see the potential for this support level to be broken, and it could come back all the way down towards about 575, 580. So there's a lot of reason to be concerned here. If you're long the stock from a shorter term time frame, I think you want to look for a place to lock in profits. Obviously, it's been in a fantastic uptrend from a much longer standpoint. But this level right here is going to be very important for the longer term holders, about $600. If it breaks below there, then I think that not only is it bad for Google, but it's bad for the entire NASDAQ, because when these leading stocks break down, then it really shakes the confidence of all the participants in the market, makes them wonder if a high quality, steady grower like Google is breaking down. It makes them examine some of the stocks that they're looking at and question why they're holding those when the leaders are breaking down. So just continue to be very careful. We're in a very treacherous market environment overall. Seasonally, we're in a strong period, so a lot of cross currents in this market, and the best thing to do is just be defensive in this environment.